Paul Bailey. Come on up and
Thank you. It's a pleasure to be here tonight. As
thanks
Mr.
for
Parkin
working with
said,
us.
I'm Paul Bailey. I'm the partner in charge of your engagement. This is Tammy Pitzer. She's a senior on your job. She runs your job on a day-to-day basis. Your audit report's about a 75-page document. I've handed out a presentation that kind of dwindles it down, so we're not here for a couple hours doing this. Overall, you're in excellent financial condition. We're going to talk some specific numbers and other things as we go along, but overall, everything looks good. If you turn in just past the title page on that presentation that I handed out, I think we also handed out your blue audit report. I believe you got it electronically also, but here's the hard copy. Sometimes it's a little bit easier to read in the hard copy than electronically. That way you had it both ways. One of the first things in your audit report is called the Independent Auditor's Report. It's probably the first thing past the table of contents, and you have what they call an unmodified or clean opinion. That's what you're striving for. We sent your report into the Michigan Department of Treasury after we were completed. We come out, we do your audit, we go back to the office, pull it all together, then we come out and meet with your management group, supervisor, clerk, and treasurer, go through it page by page, spend a couple, 3 hours going through it in a lot of detail to make sure that we haven't misinterpreted something and things like that. To just go through that. Again, you have what they call an unmodified or clean opinion. The next two items we're not going to spend a lot of time with, but I always touch on them just so you know they're in there. There's something called the Management Discussions and Analysis on page 4 to 8. And basically that's just a letter that tries to help readers understand how your financial statements are put together, as well as some very summarized financial information. The next thing is what they call the Township or entity-wide financial statements. Quite a few years ago, they decided that there's really two sets of financial statements in your audit report. There's a commercial way of looking at Clay Township, and then the traditional way governments have historically reported. The first three statements on pages 9 through 11 is more of a commercial way of recording, looking at the township, and it includes the value of all your buildings, the book value of all your buildings, any debt that you owe, including any retirement payments, things like that. It's more of a commercial set of financial statements there. We're going to spend our time tonight on what they call the fund financial statements, or the traditional way governments have reported for the last 30 or 40 years. It's also the way you keep your books there. So we're down towards the bottom, Roman numeral 4 on the handout. The general fund, you'll see there as of June 30th, 2023, you had assets of $2,867,293. You had liabilities of $105,830, so that left a fund balance or a carry forward into your new year of $2,761,463, and you can see how that compares to the numbers at the end of 2022. Number 2 there is what they call your statement of revenues, expenditures, and changes in fund balance, or your operating statement. This year, your general fund took in $2,041,000. You spent $1,731,000. So for the year ended June 30th, you were $310,186 to the good, revenues over expenditures. So a very good year. And you can see, again, last year you were $242,000 over. We also, at this time, I'll go through we include some graphs for you on page 4, just so you can kind of visually see where your dollars come from and go. The pie graphs on page 4. This is your revenues by what they call the function category. You can see about 50 cents of every dollar comes in from what they call intergovernmental, primarily your state shared revenue. So half your budget, as you're probably well aware, comes from intergovernmental type revenues. The next largest chunk there is taxes. That accounted for 26% of your general fund revenues, and then licenses and permits, and you can see the remaining categories there. And it stays pretty consistent from year to year. Well, one thing I always caution with pie graphs, when you change one piece, it affects all the others. So just because the numbers change, you got to really dig into it sometimes. So if there is a change, we spent less. Well, you might have spent more just as a percentage because something else changed. So I always caution with pie graphs, they can be deceiving. Page 5 does the same thing for your general fund expenditures. And you have, in your general fund, you spent approximately 64% of your money on what they call general government. That's the supervisor, clerk, treasurer, assessor, a lot of different departments. These categories are dictated by the Michigan Department of Treasury. They publish a uniform chart of accounts that specify various departments and how they are to be put in there. In yours is pretty much general government, because your police and your fire are in their separate fund because you have separate millages for them. A lot of governmental units account for those within the general fund, and therefore the general piece goes down when you put those in. But you can see it's pretty consistent, again, from year to year. The last page, last graph there, takes the township and all your funds that you have, and we're going to talk about the various funds, and says, and kind of takes a look at where you spend your money. And the biggest category is public safety, which is police, fire, things like that. This year, almost 50 cents of the dollar, 46% of all dollars spent was on public safety. You can see there the next kind of piece was either your public works, 11%, and general government were tied with 11. The water fund was 17%. Sorry, there. Just to give you an overview of where the dollars go when you put all the funds together and just take a look at it. If we can turn back to page 2. As I indicated, we talked about your general fund a little bit, but there's a number of other funds that are used to account for operations of the township, and they're called what they call special revenue funds. And you can see there the fire fund and the police fund, and you can see each of the revenues come in and the expenditures for each. The fire fund was to the good, revenues over expenditures of $69,612. The police fund, $86,338 to the good. The rubbish, you had spent a little bit more than you took in by $35,117. The drug enforcement fund was to the positive revenues of $4,468. Your lawn, Oakland Lawn Cemetery, negative $140. Music in the park, a positive $2,048. Road canal projects, expenses over revenues of $6,906. Your Parks and Rec, you spent $39,428 more than the revenues. The Pragmite program, you were to the good $1,586. The CARES Fund, you had revenues over expenses of $28,007. And your ambulance fund, which is new, was to the good $133,000. So, and then the next item just shows your fund balance in each of those funds as of June 30th, carry forward into the next year. All of them are positive. You would never want to try to end up in a deficit, but everything's a positive there. At the bottom of the page, you also have what they call a perpetual care fund, your cemetery perpetual care fund, and basically you had $1,945 of revenues and no expenditures out of that fund, and a fund balance of $77,945. On the top of next page, on page 3, you also have water and sewer funds that operate similar to a business. As you know, you provide a service and you charge your residents for that service. The first column is your water fund, and it starts out with your operating revenues. I'm not going to go down, but your water fund was to the good $157,159, kind of on a modified cash basis. We kind of add back depreciation and do it. And your sewer fund was $8,028 positive. The next item is kind of working capital. If you had to take all your current assets and pay off all your current liabilities, how much would you have left over? And your water fund would have just under $4.2 million, and your sewer fund about $1.3 million. And you can see the change from last year there. So that's a real quick synopsis of the numbers. I think everything looks good. There's a couple letters I want to go over, but first of all, I'll be happy to answer any number question. Tammy or I can.
So you think we're in pretty good economic conditions?
Yes, sir.
You have a grade on that?
What's that?
What kind of a grade is that?
Well, really, I mean, that's, I said excellent condition, so, I'd say you're an
What I wanted to hear.
Yeah. It's not an A, B, or C, but, there's a couple letters in the back of your report that they're loose leaf letters that just kind of want to touch on. The first one is it says Independent Auditor's Report on Internal Control. As I've explained in past years, when we come in and do your audit, not only do we audit the numbers, but we take a look at the controls to make sure there's two sets of eyes on all transactions. We also take a look, are all our invoices approved by the board? You approve bills tonight. We took a sample of invoices that were paid during the year. We trace it to the minutes to make sure, in fact, they got in front of this group. We do a lot of those checks and balances. If we become aware of any what we call weaknesses, we're required to report it to the board. I'm happy to report there's only one small one, and it's a technicality. Back when Enron was going on and everything, they had come up with the idea that every entity, whether it's General Motors of the world or a gas station on the corner, should have somebody on staff that can draft these financial statements and all the notes. That's just not feasible for our size of clients. You rely on us to help you do that, but it's technically a small, what they call a weakness in your system, because you rely on an outside party to help you do that. But most of our clients that we audit, your size, have that same issue, and I wouldn't, worry about it. We specialize in doing governmental accounting. That's the only comment on that letter there. The second letter is called the audit communication letter. Because we're not required to come to a meeting like this, we always have, and we appreciate the opportunity to answer your questions and go through it. This just kind of goes through whether we have any problems. We start, late spring, talking about, audit dates and so forth and how it's all going to work. And your staff pulls stuff together, when as much as they possibly can. And then we come in and do the audit, as I said, go back, pull it together. This just kind of explains there were no difficulties. Where it says significant audit finding, that's just a broad terminology. There's no weaknesses there. I would like to point out something there. In your 2002 audit report, we included the Harson's Island Harson's Island Transit Authority. God, I was drawing a blank for a second. And when you have separate entities, you've got to take a step back and judge whether they should be included with the reporting entity that you're auditing. And one of the big questions is can that entity impose their will on the other organization? And last year it was our understanding that your board was required to approve their budget in order for them to operate. A few things came up while we were doing the audit, so we started digging through the bylaws and the articles a little bit more in depth, and it became apparent that really wasn't the fact. So under accounting standards, they no longer qualify to be part of the Clay Township reporting entity. Doesn't mean there's not interactions back and forth and how they operate, just the same way they did last year. It's just what can be reported in your audit report. That's the only difference there. So they're no longer what they call a discretely presented component unit. If you looked at last year's audit report, their financial statements was in your audit report. And again, it was just a misinterpretation of that, of whether what duties or what oversight you had on that entity. The rest of the report here just talks about whether there was any difficulties during the audit. Everything went as planned. We also, as I indicate, when we get the audit done, we come in and spend the time with the supervisor, clerk, and treasurer and go through it page by page. And some of the things we talk about, sometimes we put on the back of this letter just so everybody kind of has an idea of what we talked about. The last page, they're not weaknesses, they're second to last page. Just a couple areas, the administration charge, we just like a little more documentation. And then, as the supervisor pointed out, you're getting a lot of grants. There's certain written procedures and things that have to be in place when you get federal grants. And if you spend more than $750,000 in any 1 year, we have to do a special type audit that the federal governments are looking for, and we have to test to make sure you have those in place. So before we had
that will be in play next.
What's that?
That will be in play for this current year.
Good. Because
we're going to get more than.
Yeah, we're just trying to give you a heads up so we don't have any problems when we have to audit that. So that's really all it is. I'll be happy to answer any number of questions, procedural questions. Again, overall, everything looked good.
Paul, in receiving a federal award, as it's listed, or a grant in this case, right? There's going to be additional paperwork that you're going to require, and the state or the federal government may require as well from us. So do those get implemented immediately upon approval of the grant, or do they have to be implemented once we actually receive funds?
A lot of them are based on the expenditures, keyed on when you expenditures. For instance, there's procurement, for instance. That's the easiest one to understand.
Yep.
So you can get a grant and there wouldn't really be any requirement to have written policies in place right then. But before you can spend money, you have to have a procurement policy. Then you bid the project, and you got to make sure that procurement policy meets all the federal regulations. And there's, like for the procurement, there's 3 different levels of purchasing. There's the micro purchase, there's a small purchase, and the higher level. And as you go up, the small purchase requires very little, checks, checking around for price, and then all the way to the formal bidding process. So it's really keyed more on the expenditure side of it, I would say, than getting the grant or receiving the money.
So when we went over this in our draft meeting, I also provided you some of the policies that we did have for federal grants. Did you guys have a chance to review those?
No.
'Cause I don't recall any feedback from that as far as what
We didn't-
additional
I was
ones.
going to say, we passed something
Yeah. Yeah, we have, and
about
yeah.
10 months ago.
Yeah, we copied them for you guys at the draft meeting.
The procurement policy.
Yeah, federal.
Right. And then we did talk about that there's other policies too that are going to need to be
Okay.
implemented prior to that. For the
Yeah.
cash management policy.
Yeah, we can work with you, on that. Cindy, I don't remember seeing the procurement policy, but I'll go back and check.
Okay.
I was just curious on the DDA. I know we had 434,000 that went to our DDA. Do they also have an audit type of a process, or is that under us, or how does that work?
Yeah.
It's in here.
Yeah, it's in the very back pages, and I didn't cover, let me just kind of find, nope, it's not the back pages, sorry. When there was 2 discretely presented component units. Your DDA is starts on page 9, and it shows the assets of $657,000. It's the far right-hand column, you see that? But there's also a page on page 75 that shows what they spent and what they took in and what they spent compared to budget for the DDA. Good question. I'm sorry I didn't cover that.
So that's their, they have 661,000 and they spent. Okay. Got it.
Did you say 661?
Is that?
What page are you looking at? Are you looking at page
I'm looking
75?
at page 9. It says total assets of the DDA.
Yeah.
On page 9, it says on the far right, component unit DDA, cash and cash equivalents at 657. They took in 3,800, so
Yeah.
they have 661,000.
Can I explain that? On page 9, the cash was $657,000. There were some receivables of 38, so they had total assets of $661,000. But they owed at that time $170,574. So their fund balance was $491. Now, if you look over on page 75, this year they took in $282. They spent $434. So they actually spent $151,000. In their beginning fund balance at July 1st of 2022 was $642. That comes down to that $491. So you this is your balance sheet of your cash less your liabilities equal that very bottom number on the page 75.
So they spent 61,000, is it? I'm trying to see what they spent, because
On page 7,
this is the only audit on the DDA, so you don't see what they spent it on or anything, right?
not in detail, no.
Okay.
Yes. Yeah, this year they took in $282,656 and they spent $434,427. That was a lot of capital items.
Yep. Pickleball and then the pier,
Yes,
Pearl Beach
yes.
Pier, the bathrooms.
Yes.
That goes through us, I mean, we approve that stuff, right?
Mm-hmm.
It's all in there,
DDA does.
okay. I just didn't know if they had, a detailed audit too, so I was
Yes.
curious.
Yes. Any other questions?
I'm good. I'm getting tired of looking at these numbers. I've been looking at them for a year.
Right?
Well, thank you. It's a pleasure to work with you again.
Thanks, Paul.
Thank you, Paul.
Thank you.